Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, and we have a podcast for you. This is actually a podcast dedicated to individuals that are involved in the operations of accounting, bookkeeping, and tax businesses, helping them build, in fact, the premier accounting firm in their area. As a podcast, what we try to do is each and every week have episodes designed to actually address the various questions that you have as you're running, operating, and getting involved in the day-to-day operations of the business. And it's in this process that we actually invite the experts, individuals that have insights, perspectives, things that we can learn from as we're actually working on our business. And today's going to be no exception. Today, I'm excited to have Will Hill. William happens to actually love business and getting better out there to serve his customers. He is the founder and owner of Will Hill Consultants LLC, a coaching and consulting firm that serves the tax and accounting profession, which Will has been actually serving since 2001. Through his 20-year career in this profession, Will has taught countless classes on firm management, change management, advisory services, and so much more. His travels to implement software and perform business workflow consulting have taken him to over 40 firm offices to work directly with the firm owners and their team members. He's known for his combination of creativity and practicality. Will brings his passion to each article, webinar, podcast, or coaching engagement that he embarks upon. In 2021, Will was also named Accounting Today in their top 100 most influential people in accounting's list. Will also happens to twice be recognized by the CPA Practice Advisor as a under 40 list recipient. And sadly, he's no longer eligible to participate in that. So that's one of those things we want to give an accolade and shout out for. So with that, Will, welcome to the show. Yeah, this is going to be quite fun. So obviously, working with firms, accounting owners, helping them work on their business is a topic that we address regularly. But before we get into that specifically, I want to go backwards a little bit and help introduce how you got into this. What was it that you were doing and what caused you to think that you could actually make a difference and start the business?
Well, it all started when I needed a job because I was about to get married. And that stuff costs money, like living and stuff, Roger. So, I actually started with a small software company right out of college doing product support. It was called Creative Solutions. Most folks would know that today as part of Thomson Reuters. And I think the humorous part there, Roger, is in my undergraduate program, I went to a very small school. The accounting professor came up to me and he said, "Will, you have the third highest grade of anybody going through managerial accounting right now." Now, we're not going to sit here and tell you that the grade was super high, but it was the third highest because we all know how we feel about managerial accounting. And he goes, "But you're not on my list of majors." And all I could think about was all the homework he gave all the time. I'm like, "Yeah, what's your point?" And so I also like to point to, if we have a pipeline problem in the CPA industry, those are your salespeople right there trying to get people into the pipeline of the industry. Is you seem to do well in this class, come do more homework. So we'll have to, I think that could be addressed perhaps a bit. But yeah, so I turned down the accounting major and ended up working with accounting firms anyways. And so that's where it started. And I had fun on tech support calls. I'm not sure if you're allowed to do that or not, but I had fun with them. Just getting to know, especially the firm owners and firm administrators as people, and what their challenges were, what excited them, what got them frustrated when it came to their business. And so, I'm not a CPA. I'm not going to write you any program code, but I feel like I speak accountant from a lot of experience. And just being able to go out there, like you mentioned in the intro, I've been to over 400 firms physically in their offices, and just seeing and experiencing what they're working through, bringing some outside perspective. But I love the heart of what accountants are. And I think at the heart, they're teachers. They care about their clients deeply. Yes, they're in it for profit, but that is not the reason, for the most part, that accounting firm owners are there. They're really there because they want to help those around them. And it's great to be involved with people like that, Roger.
I love it. I actually can relate to your first comment about the getting married being a motivation to do something practical and helpful for the finances of the household. My son, coincidentally, is getting married next month, and in doing so, he's in that same mindset. There were things before that just didn't matter, but now all of a sudden, I'm finding this motivation, this fire to do things that a year ago he had so much indifference to. But it's amazing what a woman can do to a man. So it's pretty impressive. So you start your business. Obviously, you've got a niche. Identify what your unique selling proposition is. What's the angle? What is it that you feel you can actually do and help business owners with?
Yeah. So, Roger, what I've seen with a lot of coaches and consultants, both in the space and then more broadly as well, as what I hear from CPAs about consultants that work with their clients, is a frustration of, you came in, you assessed things. Things is a very technical term. And then you gave us some ideas. They looked good on paper. And then you waved goodbye and walked away.
Mm-hmm.
And the reality is that it is not some magical idea that's new that's going to solve things. It's actually executing a plan that is in context to the overall strategy and goals of the firm that's going to do something.
Love it.
So what I do is, I work one-to-one with firms. I didn't come out and create any kind of multi-firm group thing where I'm worried about scaling and maximizing, my time. I want to find firms who want accountability and who want someone to say, hey, help me prioritize the actions that we need to take so that we know these actions are producing traction and they're not just sitting there spinning our wheels. And so that's what I do with firms. Most firm owners know where they want to go. Most firm owners even have a sense of what has to change, but they often need someone from the outside to help prioritize and sequence those things, to maybe identify what I call identifying the inertia that's already happening in their firm and say, hey,
Mm-hmm.
if I want to achieve X, it feels like Q is happening over here, but how do we leverage that motion to help move X forward? And I think that helps with speed. It also helps with continuity of the firm towards a single mission. And they just need that accountability every week, every 2 weeks, every month, whatever it is. Hey, we outlined specific actions. We didn't give a direction. We outlined actions. Did you take them? What did we learn? How do we adjust? Are we ready for the next actions? And just being very practical with that.
There's two parts of what you just shared there that are hugely important. Is first of all, asking the right questions. The second, accountability. As a good coach, you're obviously doing both. Now, with that, you're seeing in the firm opportunities. They obviously see that things can change. You were talking about leveraging and doing things in areas of the business to grow the company. So I'm going to ask, a lot of times when looking at firms, one of the things I realize is that they're not actually retaining the clients or building the proper relationships with the clients that really could take that revenue to another level, that retention to another level.
Mm-hmm.
What are some of the signs that perhaps the client relationships within the firm are just really not all they could be? Are there any signs that you notice?
Yeah, I think as you look at evaluating those client relationships and what do you see, one of the things that I look at is non-responsiveness. Now, if you're an accounting firm owner, you may have just tossed up your head, rolled your eyes, and gone, yeah, that's all of my clients. None of them are responsive. But that's not true. We remember the ones that aren't responsive. And in many firms that I've worked through and worked transitions through, they have said, hey, we shifted this client relationship from thinking that, hey, we have a tax relationship, we have an accounting relationship, we have a cash management consulting relationship, whatever it is, and we've shifted that to more of a singular relationship. And when that happens, the client begins to understand that the accounting firm is there for the good of the whole. And the actions that you're asking your client to take are not random or just to get some behind the scenes task done, but rather they are connected to the firm helping the client achieve their goals. And then we see increased responsiveness. I'm not here to claim, Roger, that your client is going to do everything you ask exactly when you ask and do it right. But generally, firms that really wrestle with a lot of non-responsiveness, the clients don't understand why their actions matter to their own goals. They think it's just about you as the firm instead of them as the client. That's an indicator that there's an issue with the client relationship.
I think this is an excellent example of something I just experienced with one of our clients literally this last month. They started working with an accounting firm, someone that I had recommended. And in that process, it was presumed by the firm that the things that they needed for the onboarding were just obvious. They would ask for certain logins, certain bits of information, back taxes, and so forth. And I reached out to the client and tried to find out exactly what was taking so long to get the financials and so forth. And they didn't realize that they were the bottleneck. And I go to the firm and I talk to them. And long story short, there was this email communication going on. But as you said, they weren't responsive. And I was explaining to the firm, you need to actually have somebody call. These people don't understand what you're asking. They don't know what you're talking about. Long story short, it was the phone calls that made the difference. It was the fact that they were able to verbally communicate in layman terms what was needed and necessary, walk them through. So what was presumably obvious to the firm as part of their onboarding experience, and the client was obviously not responsive like you're mentioning, it was just basically, in this case, an embarrassment. It was the lack of understanding. It was really, they didn't know what to do, and they were very busy. So I think there's a lot to be said, as you're describing, that lack of responsiveness as being a key. So here's a question that maybe segues well from what I just mentioned, but I do see many businesses, clients, jumping from firm to firm, and they're always looking for something different. There's something that just doesn't set right. What do you think they're looking for? What do you think that they're just not finding? And what can we do to retain them a little bit better? Because there's a lifetime value to these clients. We did so much to get them. What can we do to retain them better?
Yeah, great question. So let's go back to your illustration you just used. There is a language barrier between accounting firms and their clients. And this is where, whether it be, I don't understand why you're asking me for this or what it means, and so I'm not going to respond, or going the other direction. The client saying, I guess you do a good job on my tax return, parentheses, they wouldn't know it any other way if you didn't do a good job, except if they got audited. But I need something more, but I don't know how to describe it. And when they don't know how to describe it in a way that they feel makes sense, they say nothing.
Mm-hmm.
And they just kind of look around and they listen to their peers in their business water coolers, right? They're going to their chamber events and they're going to the other networking things going, hey, what does your accountant do for you? Hey, I've got this business problem. Who's helping you with it? And the struggle, I think, that makes this language barrier so real is that we use really common language, Roger.
Mm-hmm. Yeah.
So, when you and I were to talk about something and we say, marginal tax rate, the words margin, the word tax, and the words rate, none of those are unfamiliar words. We know what those mean. The problem is I don't understand the application of the three words together. But because the words are so common, I feel stupid if I ask a question about it, and I don't want to feel stupid, so I'm not going to ask a question. And that's the beginning of the language barrier. Now, my wife is a nurse, Roger, and every time she gets around somebody else who is also a medical professional, there's a language barrier. But that's a very different language barrier because they're using words no one knows, and everybody knows no one knows what that word means. It's way too many letters. It shouldn't actually be a word. And so no one feels stupid asking that question. Right. And so there's a difference in why don't health professionals have this challenge? Well, because doctors know they can't speak doctor speak to patients.
Mm-hmm.
Patients know that it's permissible to ask questions because it's not expected that they know these answers. That relationship is not the same in the tax and accounting space with customers. So we've got to find ways to overcome that. I think that's why people don't ask for what they're missing because they don't know how to describe it. And how do we retain? You already said it. Ask more questions, Roger. That's what the firm has to do. And I think that we get in a habit of asking questions about the service at hand in the moment. Did you have any more children this year for your taxes? Did you buy a new vehicle? How much did that vehicle weigh? All these sort of things. We're asking questions in the now instead of asking questions about looking forward. Hey, business owner, what do you think you're going to do next year? Where do you think your growth is heading? Where's your biggest obstacle to achieving some of your goals as a business owner? How about this? What are your goals in your personal life as a business owner? Because until we can get them conversing with us about things beyond just historical numbers, we're not going to be able to identify their needs. And that's the purpose of the question, is not to necessarily just learn about them, but it's to connect the dots between what we learn and how we can help them with the knowledge and deep technical abilities that we have in the CPA profession.
I think what you're doing a great job of illustrating here, beyond just the communication, is this process of taking the services provided by the accounting firm from accounting into the advisory space. How would you distinguish or differentiate what is accounting versus what is advisory services, that additional service that you should be charging more for?
Yeah. So I think from a simplest perspective, advisory is anything that looks forward. I just draw a line in the sand or a line on the calendar, right? If the activity has already happened and we're reporting, recording, and informing based on what's already happened, it's compliance work. And if we're looking to do something different that affects the future and give us a different result, hopefully a better result, then we're in the advisory space. So it's a simple definition, but because it is rather broad, there's no list. I don't have a list of all advisory services, but I think that's also a good thing because you can then look at what are the types of clients I serve? How can I approach them and their needs in a unique way? What are the skills we have in our firm and the experiences we have in our firm? And how can I bring that to bear for these clients, right? So advisory services are going to vary firm to firm, but what's going to keep them consistent is let's do something different so that we can get a different result as we step forward.
Perfect. I'm going to take this. We're going to go a little bit deeper on this because I've got a lot here, and I think you do as well, to share. The first thing is, just for the listeners, I'd like to put this into some context. There are three core services that exist within a full service accounting firm. You've got bookkeeping and accounting, you've got tax planning and preparation, you've got CFO and advisory services. And firms can decide which of all those services they choose to offer. But let's just dive a little deeper into the bookkeeping, accounting, and advisory, since that's what we're discussing. Some people really struggle to distinguish between these, and you've already done a great job of differentiating between accounting and advisory. So I'm going to back up a little bit to bookkeeping. Bookkeeping is everything done to actually record the transactions and prepare the financial reports. If you're each month, quarter providing to your clients those financial reports, the bookkeeping is done, it's complete, it's accurate. The accounting is then the assessment, the analysis of those reports. It's doing the last month to the previous month comparison. It's doing last month to same time last year, same month comparison. It's last quarter to the previous quarter comparison. It's doing basically the KPI analysis to look at what the margins are throughout the reports. It's basically taking the financials and helping interpret them for the business owner and give them insights as to what's happening in the business. But I liked how you said that the advisory is then the forward thinking. It's not just the budgeting and forecasting. It's now asking questions about where they're going in business. And I appreciate that you just said a moment ago that the advisory is less definitive. It can vary firm to firm. But I would like to just kind of offer three that we have found in our experience to be kind of expected or at least anticipated to be provided. It's, first of all, having a greater understanding of accounting. So if the client in the advisory services can get a little bit deeper into the business, look at tax strategies, deal with things that are a little bit more forward thinking as to cash flow management, those things I think are within that wheelhouse. The second is increasing revenue. Sometimes the accounting firm doesn't see how it can play a great role in increasing top-line revenue, but there's a lot of great questions that can be asked, such as where's the money being spent in the marketing and sales, and is there a direct correlation with the ROI? There's a top-line revenue discussion that can easily be had by the firm with the owner in an advisory capacity that increases revenue. The next would be improving profit. They work so hard to get that money, there's a lot of conversations that we can ask now about the expenses going on within the business, their necessity, how they relate to one another, how essential they are to either gross profit or cost of goods. There's a lot of things that we can go on and discuss that can actually improve the profit margin, and in doing so, more ensure that profit makes it to the bottom line, and in doing so, fulfill that role in the advisory space. But the last one, and perhaps the deepest one we could go into, is the advisory role that we can take to build value in the business. There are specific things that determine what the company is valued at, the valuation of the business. And if we can, through our advisory services, help eliminate some of the things that deter from the valuation of the company, we can get into just various there's a number of ratios, is what I want to say, that really we can get into. Return on equity, return on asset. I mean, there's EBITDA that we can be looking at, and those things are numbers. They're very natural to us in the accounting space, and from an advisory role, we can start talking at a deeper level about those and really impact the valuation of the company. So I just gave a ton of things. You were speaking more to perhaps there's not a recipe of sorts. How did you feel with what I just shared a moment ago?
I think that's what you just shared are some of the practical examples of what you can do. And then we get to the creative part, which frankly is where a lot of accountants get a little bit uncomfortable, Roger.
Yeah,
not all of them.
Very true.
Right. But the creative part becomes, how do I craft our relationship so that's part of it?
Mm-hmm.
Do we have to scope a project and then deliver to that scope? Do we say, hey, this is what we're going to do for you. We're going to help you increase the value of your business and look to see if we can't increase the value by 15 or 20%. And we're going to do that by just having conversations every month to help keep behaviors in check that need to be there, to identify market trends, and to let the business owner, who's the expert in their industry, come and say, ooh, this is what I'm seeing. It's costing me more to buy lumber right now. Or I guess right now lumber's going back down. Whatever.
when this airs, I'm sure it'll be back up. There you go.
Yeah, we'll see. There's some kind of, I'm seeing a shift in what it's costing me. What do we do? Right. So in the coaching type of relationship that's there, or even in the scoped area, sometimes accountants get concerned and say, ooh, I'm not an expert in textiles. I'm not an expert in whatever it is my business owner client is an expert in. You don't have to be. You have to create the forum and the space to have the conversation, and how you can craft that into your engagement a number of different ways. You can gate it and say, hey, we're going to do this for 6 weeks. Or if this is a longer run project and this is about longer run goals, you may want to say, hey, let's do a year contract and we're going to work through some things. And I want you to bring the market information for your industry. I'm going to bring our current financials, right? So this is where, and we talk about accounting and advisory, staying recent, live, up to date on financial information is so important, not being a quarter behind, because they're bringing market trends that are live to you, and you want to be able to know if you have to respond aggressively or maybe more conservatively, but you can't do it if you don't have real live numbers, right? And so we just want to help them connect those dots between the market behavior and then their personal behavior and result. So we have to craft in a creative sense, how are we going to form those interactions, and what does that commercially, if you will, look like, Roger?
I'm loving this because I agree with you. A lot of firms, the mentality of how do we transition from these conversations just being casual in nature to where they're actually paying for these engagements, and how do we structure it? Is it more of a project that we're going to be doing that we're compensated for, or is it truly an engagement that's intended to go on for months, if not years? And describing what that would be for the client to actually feel good about paying for that additional project or engagement, delivering on that, asking these right questions. What we're discussing here is hugely important. What I will complement what you just said with is when we began working with firm owners, one of the first things that we realized is we were spending quite a bit of our time, especially in the first month, really diving deep into who they are, what they do, why they do it. And we chose as a descriptive part of our engagement to say that is our engage and manifest process. And that's where we get to learn the client, their inner workings, why they do what they do, their passions. And that's helped us in our conversations that then followed because we knew what the foundation was for all this business. We knew why they were doing it, where their passion lied. And it really helped for us to actually deliver a quality service there. And as firms did the same with their own clients, they found that the relationships got deeper, and they were able to now start justifying even more that additional fee for this advisory service that they're offering. So lots going on there.
Mm-hmm.
But I'm just curious, what have you experienced as you've dealt with this mental aspect of the firm members wanting to offer advisory service, have these relationships with their clients that are project or engagement based, they're being paid for. But how do you switch mentally to it's not just a conversation we're having, you're actually going to pay me for this discussion?
So I think the way you do that is you shift the client relationship and you shift it to being that with the firm as a whole and not just a single individual or not just a single line of service that's in place, Roger. And to say, hey, if and I think about this with firms, they are happiest when their clients are achieving their goals. And so why not force, I'm using air quotes here, as you can clearly hear on the audio, why not force that into the engagement? Say, if you're going to work with us, here's our minimum level of service, Mr. and Mrs. Client. We're going to do your taxes. We're going to take care of the books on a monthly basis. You have to have payroll done professionally somewhere, whether it's us or somewhere else, don't care. And then we're going to meet and talk 3 times a year. So at a very rudimentary level, this is a way to say, hey, we're going to have advisory conversations. Now we're probably going to tag some of that together, right? One of the meetings that we meet is going to be when we deliver the tax return. One of the meetings might be during tax planning time. But then this is where I may choose, as a business client of mine moves along, I'm going to be listening carefully for moments of transition, because moments of transition are where your value is accentuated even further.
Mm-hmm.
So if I'm talking to my client and they say, oh, things are going great. In fact, next year I'm going to bring my daughter on board to the business. They're my succession plan. And I hear that, I might say, hey, next year, why don't we, instead of meeting 3 times, why don't we meet 6 times? I'd like to have your daughter in on those meetings. If they're the succession plan, we have a few things we've got to talk through. We've got to bolster up the education. Would that be worth it to you? So now I'm just upping the frequency dial. They're going to pay a little bit more, but it's for a specific purpose. Mm-hmm. We get through that year, say, hey, we're going to go back down to 3 meetings. You've got a 5-year run on your transition. We established a great foundation of knowledge for your daughter. They're going to be in a good position. Let's turn the dial back down. Right. So I think this is one of the other hidden pieces where firms assume that if my client spends more this year, they're going to have to keep spending that same amount next year, or I've done something wrong with the client relationship. And I just don't think that's true. I think your dial goes up and down based on transitions happening with a client. Mm-hmm. And I think that's okay. And it actually brings even more trust from the client when you say, hey, you're going to have to spend more money with me. They've got experience of, I'm spending money with you when it's valuable to me and not just because you can happen to get away with charging it.
Perfect. I like this. Yeah, one of the things that I think the firm owners struggle with is that very thing you described. How do I actually explain how this additional cost is associated with the fees that we're charging and the value, the benefit that they're going to get from this engagement, including advisory services? So that is helpful.
Let me jump in on that for just a little bit more here, Roger, and say that this is where we hear a lot of conversation right now about subscription pricing and this sort of thing, right?
Oh, yeah.
This is where it really comes in to power and to bring it into a single relationship, because now I'm not trying to say, hey, pay me another $3,000 the single check, because I've separated that point mentally for the customer. I've separated our advisory conversation and all the other work we do. Rather, I would say, hey, we're going to do that next year. Here's your new monthly price, because your relationship is still one relationship with our firm. And I want to subconsciously convey that if we don't connect our advisory conversation with the compliance work that's happening and vice versa, we're not doing you our full set of service that we should be able to. So don't disconnect the two with billing or invoicing or engagement agreements. Keep it all together as that single relationship.
Yeah, very, very important. In fact, I appreciate you bringing up subscription. That's something that's going on big right now. I know Ron Baker's talking about it now. But at the same time, in addition to the pricing, I like how you're trying to say that as part of the engagement, we're just going to bundle all these services together so that there's a connection, there's a relevance as to why they're paying the fee that they're paying. Now, I'm going to back it up even further. I think it's very helpful, not for every client, because I don't know that all of them need or want to know this, but you have to be prepared, I feel, as an accounting firm to be able to explain what are the features and the benefits associated with the bookkeeping services you provide, and how that leads to the accounting services that you offer, how that leads to the tax planning and preparation services that you may perform. And you need to distinguish these all along the way. And whether you're choosing to offer CFO or offer advisory services, it's meant to be a single package. It's in the pricing, perhaps as you're calculating what services you're offering, or better said, which they're choosing to choose as a company to pay you for. But each of these need to be bundled eventually to where it's like you just mentioned, a single offering with a single price point, so that they don't want to maybe get in and nitpick. Hey, I don't want this. Can you take that out? If they're unable to carve out those things, we're better able to sell the package as a whole, get them to sign as a single engagement. Now it's retained month upon month as a single fee. That's what we're looking for, simplicity.
Right.
And it makes it so much easier to retain them as a client, because then they don't feel nickel and dime. It's a bundled package price. And the reason why I bring this up is I think some clients see greater value in the accounting services than maybe the advisory services. But in their mind, it's a single price. You may have a client that really values the bookkeeping because of the peace of mind that comes from the financials are current and updated. You may have another one that's very much interested in the tax preparation, that they're not going to get late fees and do an extension and so forth. You don't know what the client's past experience is with the accounting as to what they're going to value the most. But as a bundle, you're delivering, they're happy, and they're willing to pay the fee for the service. And that's, I think, what I'm taking from our conversation. How is that?
I think that's spot on. So, I think a little bit about how I have configured my services for accounting firms. And my core initial service for most firms that I work with is 8 sessions of coaching and consulting, either weekly or biweekly. And then when that's done, we evaluate our inertia. And if we like where we're headed, we shift to a monthly contract from there. And I've got one price for those 8 sessions. But what I don't do when I'm having a good day is I don't start the conversation with, let me tell you the value of this. Because I know from experience, there are 4 or 5 different elements that I do. I'm going to do them every single time. But the weight that each of them carry depends on the need of the customer.
Exactly.
One firm is going to say, hey, point A, that's the most important thing to me. Another firm is going to say, look, point A is no big deal, thanks for the help. But point C, that's the one that really, it makes the whole spend worth it. So what I need to do is I just need to listen for where their pain is. And then I say, hey, look, here's what I do. And I can see with your pain, point C, that's the one where I think we're going to spend the most of our time and put the most emphasis. That's going to resonate strongly with you. I don't have to change what I'm doing. It's just a matter of how hard do I push on the button in area C versus B and D.
What you just mentioned is so true. I can relate to it on so many levels with the clients that we've worked with. So I'm just going to share something here, and then I'd love to get your thoughts and how you feel what you're experiencing also relates. For years, as we were working with business owners and helping them in their businesses, we struggled to articulate what was the offering, what were we doing, and ultimately it came down to 5 things. And we described them as engage and manifest, which I shared earlier, understanding accounting, increasing revenue, improving profits, building value. And as we said those 5 things, those really encapsulated the 12 month engagement, and it usually takes 12 to 18 months. The 12-month engagement that we do with the client, and what was beautiful about that is all the parts fell into one of those 5 areas very, very comfortably. But the one thing that was very fascinating to me is most of the time we would acquire a client because of increasing revenue or improving profits. Those were the ones that were sexy. That's what drew the client in. That's what they were wanting to work on. That's where they felt they wanted to make the biggest difference. However, like you were just mentioning, when we did Engage and Manifest, when all things were said and done, for some clients, that was perhaps the breakthrough that they want and perhaps most appreciated from the entire five-step experience. For others, it was the power of the understanding of accounting. They just had their minds blown, and it was just so much less intimidating and overwhelming. Others, it was building value in the business. They just were able to work on their company and build value and see that their business was worth so much more money because of the things that they implemented and addressed. Well, my point is like you were describing, at the onset, they thought these 2 things would be most important. In the end, it was one of the other 3 that perhaps was the most valuable. And so it's hard for you as the the deliverer, to really identify what's going to, in the end, resonate the most and be most appreciated and valued. And it's going to vary client to client, and it's going to be a unique experience for everyone. But like you just said, you do the same thing with all of them.
Spot on.
Yep, very true. I love it. This is such a good conversation. All right. So the next thing I wanted to get into is the business world. We hear the word niching, specializing in certain industries. There's a lot of value in that, very specific targeted marketing, very expert knowledge in certain industries. There's a lot of value there. You can charge more for it. But in that process, it is common to also see that we find ourselves bringing on several new clients in a whole new area, an area that we didn't know much about, maybe didn't have much an interest in, but because of offering good quality services to that one client, a referral comes to another, we get another client that's in the same space. And before we know it, we've got 5 or more clients that are now in a second industry, someplace that we're becoming more familiar with, something that is kind of interesting. How do you actually start to transition to learn about that industry, meet their needs, learn things about that new client type? Do you have a thought on how to actually deal with that transition?
Yeah. So it's a great point, because we know that business owners talk about their problems with one another, mostly inside their own industry space, but then also outside. And the first thing I would say is, you cannot lose confidence just because, I've got this type of company, I don't have any others. What does that mean? You still know your stuff, right? And so, all right, are they running a checkbook-based business? Do they have payroll? Do they have inventory? Like, these things, regardless of their industry, you're able to carry forward. So the first thing you have to do is affirm your confidence in the foundation. And then from there, hey, I think we've already talked about asking questions, Roger. That's the next question. Hey, what is it that keeps you up at night? Tell me a little bit more about these things. Probe with those questions. Oh, you're a barber. Tell me a little bit more. You went to a barber conference. What do you guys do at a barber conference? I don't understand. Does everybody already have a haircut? Like, ask some questions about what goes on, what keeps them up at night. Find their trade publications. What are they reading? And what are the experts in their field talking to them about? And then this is where you have to start connecting the dots for yourself. Hey, the experts in this industry field are talking about supply chain issues. Okay. So we need to think about, how do we get in front of inventory challenges? How do we predict sales a little bit more accurately? How do we watch for overages in certain spots? Right? So if I can find where they're going for information on their industry, I don't have to learn it to be an expert. I just have to know the topics. Because the great thing about our listeners here is that you understand how you can make changes on the books and in financial behavior based on where you see the wind blowing. And you just have to figure out, how do you read the wind in that particular industry? And usually those kind of trade publications, their conferences, and just asking good old-fashioned questions and not being afraid of it. Again, resting on your foundation and the knowledge that you already have that got you to where you are. That's what I would say, Roger.
I love it. One of the things I've also added to this type of a discussion is just that childlike curiosity. Just have fun, learn about the new industry. What makes it tick? Why does it exist? How do they make money? Why does someone get into it? I mean, it's just fun little, 2 to 4 year old questions that you just kind of use to learn about the industry, become kind of interested in it. It just makes it fun, in my opinion. So that was really good. Here's the next question. We've obviously in our conversation moved beyond the traditional services. We've had a pretty good discussion about advisory. So I'm going to kind of go a little deeper here. How would you describe the difference between CFO services and advisory services? You've got the fractional CFO, the part-time CFO. I mean, there's that space. What's CFO services and how does it differ from advisory services?
So I would have to, with humor and respect, first say that if we could actually define CFO services as real CFO and not just full-time bookkeeper, that would really help in this part of the conversation.
That's awesome. Okay, do it then. Do it.
All right. So what I'm seeing as a lot of firms are going, ooh, we're gonna be like their fractional CFO. And what they're doing is they're taking over and automating all the real-time bill pay, AR, transactional entries, all that sort of stuff. And I don't picture that as a CFO service. I picture that as a fully automated outsourced bookkeeping solution, which
thank you. Very good.
Which is great and amazing. And if you have the skills and the technical aptitude to deploy that service, do it. Your clients need it. Great. I have nothing against it. But it's not the same as CFO, right? I think that the CFO is looking to be the strategic arm, not the tactical arm. And all the automation and the outsourced work, that's tactical work. And again, great, it needs to happen. It's not less than, it's just different. And so if you want to truly say, hey, we're going to be that outsourced CFO, that means you're involved with strategic conversations. So then the question becomes, how big is your client? And we're going to meet 4 or 5 times a year, just me and you talking? Well, if you're my accountant and I'm a sole practitioner with, no real support staff, then yep, that's it. That's all I need as my outsourced CFO. However, if I'm a bigger client and I've got a board, then you're going to be going to the board meetings. We're going to be involved with other activity that happens at the business. And you've just got to carefully scope out and define, this is what that role means. This is the expectation and this is the goal. And I think one of the things we have to ask is, what will success look like? So if I agreed to do outsourced CFO work for you for a year, Roger, at your business, we both have to agree that this is how we're going to measure success, right? And that may not be just by numbers, right? It might not just be by, well, we're going to grow profit, we're going to grow EBITDA. It also may be, hey, we're going to cut down decision churn time by a week because now we've got someone that's knowledgeable in the impact of finances here at our disposal. So we're not going to hem and haw on decisions for a month. We're going to only hem and haw for 3 weeks, right? So you don't have to be quite so, you have to be able to assess success, but it doesn't have to be maybe quite so traditional in terms of the numbers analyzed. What do you think?
I think it's great, and I'm going to add to it, but I think you just did a nice homage to Who Moved My Cheese, didn't you?
Yeah, I think that could be said that way.
There you go.
In our house, we've kind of shifted a little bit more dairy-free. So my wife has definitely moved the cheese, in case you were wondering about who moved the cheese.
I loved it. Well, it's either that or who cut the cheese, but neither's important at this point, so we're good. So here's what I'm going to do. I'm going to describe CFO services and to complement what you were just sharing, and then I want to ask about advisory. So CFO, the conversations I've had, and this is where I really push the envelope, is I believe anyone offering that fractional part-time CFO type service really should be delivering on helping that client with the strategic, just as you explained, but very importantly, with the relationships they have with their bank, with their lenders. They need to be going out and negotiating new terms, from taking a pay upon delivery to a net 10 and net 30 and net 45, But I also think it's strategic, like you were mentioning, where we're talking about how do we leverage cash flow? When we're in a cash crunch, do we tap into the line of credit first? Do we leverage a credit card that we have first? Which credit cards does the company utilize to actually manage their payments? Are they using something that gives, say, cash back, or do we have somebody with a Delta Mile, Southwest, a Marriott card? I mean, where are we getting the perks for the services that we're running through that card? There's a lot of strategies related to cash flow, regarding the money management in the business, regarding third-party relationships with vendors and so forth, that as a CFO, they should be involved in helping the business owner get the best relationships possible. And I think too often the business owners, because of their involvement in the day-to-day operations of the business, leave so many of those things to chance. And yet if you can get in and with cash flow management strategies, help the business owner retain their money longer so that the bank account's larger, so that they're in a position where they have more control over how and when they're paying their bills. If you can help with the receivables process, how they go about collections, when it is that they choose to write things off, how they turn it over to a collection agency, what agency do they work with, what agency gives them perhaps the higher return on the collections that they turn over. I mean, there's so many things at a CFO level from a strategic standpoint. They can implement or really affect the business model of the business in a way that the business owner can benefit from hugely if they just offer and provide those quality CFO services. And too often, it's like you were describing, it's the glorified bookkeeping that they're delivering on when they should be doing so much more. Let's talk about advisory. In that space, there are some words that are used as if synonyms, but in my opinion are not synonyms. And I'm just curious if you choose to distinguish between them or if it matters to you which word they use. Sometimes they say mentor, sometimes they say coach, sometimes they say consultant, and then you have advisory. So is there a difference in your mind between consultant, mentor, coach, advisor? I mean, how do you, which do you choose to use? Which do you feel matters?
I love and I hate this question, Roger.
That means it's a good one.
I love it because it's a fun little conversation. Sometimes I don't like it. Hate's kind of a strong word. I should back off of that one. Sometimes I don't like it because I'm not sure we get a whole lot of value from having the conversation. So I would say this. We could go round and round. And I was kind of anticipating you to ask about the word consulting, right? And say, hey, when is it advisory? When is it consulting? And so I could sit and tell you that, hey, consulting is a little bit more of a defined package. Advisor represents more of a relationship and an ongoing fluid sense, right? Consulting service has a little bit more of a specific pointed focus, start and stop. Some would also argue, though, that if I engage a coach, they are continually consulting me or continually advising me. So I don't know if the word really ultimately matters. I think you have to do a couple things. One, how does your target market interpret those words? What are the associations with them? Are they understood? Do they matter? So if your clients say, hey, we love the advice you give me, and you hear that, call yourself an advisor, because that's how they're interpreting their needs, right? And then you have to focus on how do we scope and set expectations? Because once we scope and set expectations, the client might look at this and go, oh, well, really, you're a consultant. Or a different client could look at the same scope and set of expectations and say, you're my coach. At the end of the day, does it matter what they call you? And we really have to focus on what's the scope, what's our goal and outcome, and let the labels kind of fall as they may. So that's my answer.
All right. I appreciate the answer, and I hope that what I'm going to say right now complements more than distracts from what you just shared, because I actually agree with you. I think the terms are in many people's minds interchangeable in so many ways. In a conversation, they're used in a synonymous way. And so I don't want to be the one that fixates on them or draws attention to them unnecessarily. And for the client, that's where it all matters. I mean, it's what are they expecting and are we delivering it? But at a very practical point, I do think that we need to be educating our clients as to what services we're truly providing. And I think if we define these terms as they're actually defined, uh, I dare say as a dictionary term, I think we do need to do ourselves a favor and delineate. So, first of all, I'm going to agree with you. I think we don't want to be the ones that are nitpicking on the words and being particular, because at the end of the day, I think it's more clear what they want based on the other parts of the conversation than the term they're choosing to use. But I'm going to just give a definition for each that I have found to be hugely helpful in the conversation. Very much like when I have conversations with potential clients as to what well, not even potential clients, even accounting professionals, as to what the difference is between bookkeeping, accounting, and, like we were just describing, CFO services. That understanding, I think, should exist, although I agree with you, it often doesn't. So here's my definition. Curious if you have any comments to it. Mentor, it's a non-paid individual with whom you associate that's just basically further down in the experience and is willing to impart freely of their expertise, their thoughts and ideas, and it's through association and interaction that you're gleaning from that relationship. You're being mentored. It's the lunch, the dinner, the association, but there's really nothing formal about it. The next is a consultant. A consultant is someone who has the skills, the means to do a task, and they're paid to perform that specific task. So they are paid to actually deliver on something particular. So as a consultant, I'm coming in, I'm paid to do something, and I deliver it. The advisor is an educator. It's someone through either group type trainings, individual one-on-ones, is educating, let's say in this situation, a client as to certain business principles and so forth. And as an advisor, they're giving direction, counsel, just the word advice. And in that, the business owner in this situation is better educated and better knowing of what ought to be done, best practices. The coach is the pinnacle of it all. The coach is really where, as a coach, you are doing the advising. You're not doing the consulting. You don't do the work. That's hugely important. The coach doesn't do the work. The business owner does. The coach does the advising. They're going to educate and familiarize the person with best practices, but the coach role, what makes it so unique and so valuable, are what we were describing at the very beginning. It's asking the right questions as to find how what's being taught is applicable to the client, and then holding them accountable to the things that they say need to be done as to whether or not they're actually being accomplished. And that coach is that person that I think a lot of us are aspiring to work with, that asks the hard questions, gets us to think, gets us to see what we ought to be doing, and then holds us accountable to ensure that we're actually doing what we feel is important. So definitely includes the advisory. There is that educational element, helping us learn more about ourselves, our business, and so forth. But so much, it's the questions and accountability that distinguishes a great coach. And so in conversations I've had, people have heard that description. They're like, you know what? I've used the words simultaneously or synonymously. And when I say I mean myself, because I realize it's a lot to ask for somebody to know those terms as defined as I have. But I do find value in saying, no, you didn't pay me to be your consultant. I'm not going to do the work.
Right.
I'm going to be your advisor. I'm going to be your coach. Mentor, no, this is just free advice. I like you and I like spending time with you. Can I just give you some advice? And that's where I sit. So anyways, how did you feel about me being so particular about that?
So my thought on that is that being particular like that, and by the way, love those definitions. I don't have any argument with them whatsoever. I think there's really good value internally for accounting firms to say, hey, do we understand the difference between these things? And so that as we look at how do we best serve our client, we put ourselves in the right position. So I think it is important internally to know, again, what's the scope and what's the expectation. But then you want to be consistent with the words outside with your client, great, do it. And be consistent there, align coach versus advisor versus consultants accordingly. But I would not try to waste a lot of effort correcting the client's understanding of the term. I want to focus the client and orient the client around what are we solving for and what should they expect of me while we solve it. And if they happen to call it by the right label as we go, great. If they call it by the wrong label, I don't care because we're on the same page with what we're trying to achieve.
Good point. Good point. All right. This conversation has been great. It's just as I had hoped. We've gotten into some of the particulars associated with these types of services. I love what you're doing with business owners, accounting firms to help them actually rise to these levels, offer quality accounting services. This is great. What I'm going to do is I'm going to take a moment and summarize our conversation, kind of wrap this up a little bit, and then I'm going to come back to you, Will, for a closing thought and just kind of see what more you'd like to just end on as a high note. But before I go any further, I do want to mention to the listeners that we do have an offer. So with that, I want you to go to the episode description to get the details. Will has been so kind to actually offer a consultative one-on-one together with him for free that you can take advantage of. Just go to the episode description and there get his information to reach out and say hello. And in doing so, see what basically you can glean to apply to your business and see what that might look like for your own company. In addition to that, we have some other related offerings. We talked earlier about the value of communicating effectively with our clients. In layman terms, the things that they ought to know about their business that we're bringing from the accounting perspective. For that reason, I'll be putting some information regarding a program called Color Accounting. Color Accounting is used in Inc. 500 companies, international businesses to really help everyone in the organization, from upper management, mid-management, office managers, basically everyone that is involved in the company, understand the terms related to accounting, just to give everyone a big picture perspective of what's going on in business. And it's hugely valuable as accounting professionals work with their clients. The clients are experts at what they do, but accounting is the language of business, and we need to oftentimes be that translator. And this is an effective way to help learn how to best communicate with your clients. The other happens to be that of advisory services. For those of you who are interested in exploring offering advisory services, getting a little bit more into that CFO advisory space, definitely want to encourage you to check out Becoming a Profit and Growth Expert. It's here that you can learn the various skills to market, sell, price, and more importantly, provide these types of services as we've been discussing today. So check those out. At the same time, one of the things that I'd like to do is just encourage you to subscribe to this podcast. Each and every week, we do put out there a variety of things that are meant to actually help you work on the business to, in fact, have the premier accounting firm. So subscribe now. Definitely get the notifications that you need. Go check out our past episodes, all the various experts that we've had on already, to see what they've discussed and shared to help us work on building the premier accounting business in our area. Now, with that being said, as a summary, wow, what a great conversation. Will definitely delivered. We had a conversation about not only how he got into this, but really what is it that a firm experiences as they're choosing to offer accounting services, going into advisory services. We described the distinction between those. I loved how Will was able to distinguish that accounting is more historically, more backwards facing in the sense of what's happened in the past. Advisory is definitely more forward thinking, things that can be implemented and done with the business owner to address what their trajectory is and where they're taking the company. That was a wonderful description. The other happened to be just getting the confidence to have these kinds of conversations. And we talked about it from a pricing concept, bundling these services in, making it be more of a bundled offer so that there's less confusion as to what is what, because really at the end of the day, we don't necessarily know what the client is going to most value or appreciate from the services we're delivering. We do the same services for all of our clients, but each of our clients are going to appreciate various elements differently. Great insight, I thought, that Bill brought there. The other that Will brought up happened to be related to this concept of what is CFO services. I liked his description of that, more strategic strategies with the business owner as it relates to their company. This conversation about advisory, great advice. We don't want to become overly anal or particular about the terms they're using to fixate on correcting our clients and saying, well, you paid for this and didn't pay for that, perhaps. We just need to be clear. We need to be direct and need to set realistic expectations. I thought that was a very good conversation and something that as accounting professionals, I do know that we sometimes fixate on, and it's something that we need to relax on. But it's good to still know the terms is what I was trying to say, and I hope that that explanation of the terms was helpful. The last thing that I'd like to kind of draw some attention to is the fact that we talked about sometimes we're getting introduced to new client industries, new businesses, and we need to have that curiosity to go in and find out about them. And he gave some great strategies of getting the periodicals, where they get their information, find out what the topics are that are of interest to them today, what are their experts talking about. Good advice on how it is that we can become more familiar with the clients as we're taking them on and understanding their needs and their current situation. So a good wealth of conversation and discussion today, and I appreciate Will for having that with me. So Will, what's a closing thought you'd like to end on?
I'll just end with this. Any growth is impossible without learning. We talked a lot today, Roger, about asking questions. So whether you want to grow deeper in a relationship with your client, you want to grow your services to a different level, all those things require learning, and that comes by asking questions and just being willing to continually put yourself in a teachable spirit.
Perfect. Teachable spirit. That's an excellent way to end this. Well, with that being said, Will, thank you for your time. Once again, this has been a great discussion, and I'm really appreciative of it. So to wrap things up, I do want to encourage our listeners, definitely subscribe if you haven't yet. We'd love to have your subscription, and more importantly, if you can give us some feedback and reviews, we'd always value those. Love to hear what the listeners are saying. Also want to let you know that as for these principles and any others that you're learning through the podcast, if you'd like to learn how to best apply them in your business and learn more what it is you can do to, in fact, have the premier accounting firm, whether it's yourself, training your staff, and so forth, feel free to check out universalaccountingschool.com or give us a phone call. You can reach us at 801-265-3777. And always remember this, if it's about accounting, it is universal. Do take care, have a great day, and have a safe day out there. Bye-bye.